My name is Russ Horn, and today I want to show you how to manage a trade using the market swings. There's going to be times where you're taking a trade and you think the market can move farther than it normally would. And I want to show you how to manage that trade so you can let that market move without getting you stopped out prematurely. And at the same time, you want to capture as much of that market movement as possible and have that stop loss take you out. Now, the first thing we're going to do is be looking at an entry. So we've got our entry here, and this is where we get into a long trade. So our stop loss would go just underneath the swing low. So I want to put this arrow to show us where the stop loss would go. Now the market has moved. Our entry level is here. Market has moved up and it's made its first pullback. So what we're looking for now is to manage the trade using these pullbacks. So we're going to be moving our stop loss underneath each of these swing lows. But the trick is knowing when to do this. Now the timing of this is important because we need to see that the market has actually made that swing low. We don't want to be guessing where that swing low is. And the way to know that that swing low has actually been formed is to wait for the market to make a move beyond that recent swing high. So the market makes this move up, then it makes the pullback to create that swing low, and in doing so it left behind a swing high. So what we're doing now is waiting for the market to move just above that swing high. So I'm going to draw this line on the chart, and when the price gets even 1 pip above that swing high, we're going to be looking for the lowest point in between that swing high and the place where the market broke that swing high, and that will be down here. So I'm going to move my stop loss to just underneath that swing low. So now we're simply going to repeat this process. Market moves up, comes back down, and then it comes back up again. So we're going to be marking off this swing high, and we're looking for the price to move even just 1 pip above that swing high. And it does that here. So we're going to take our stop loss now and move it to just underneath that swing low, the lowest low between those 2 points. So now we've got this new swing high, and we're going to repeat that process again. So I'm going to mark off that swing high, and we're looking for the price to get just above that level, and the swing low in between these 2 points is right here. And we're going to do this over and over and over again until we get stopped out. So we can see we get a swing high and the price moves down and breaks above that swing high. And then again, price moves down and then breaks above that swing high. So we're taking our stop loss and we're moving it to here and then to here. And then we have this new swing high here and price gets broken here. So the lowest low in between those 2 points, I'll actually draw the line for this one, is right here. So our stop loss gets moved here, and we're going to do this over and over until that trade takes us out, and we're going to get taken out over here. So finally we get an area where we have this market making a swing high, price pulls back, breaks above that swing high. Our lowest low in between those levels would be here. And finally, we get taken out of the trade. So this is a bigger trade. I'm going to zoom out just so we can see how far this market has gone. So we started with a trade that was so big. Let's take a look at this. We had a approximately 32 pip stop loss, and we ultimately ended up getting a 400 pip trade out of this. Now, it's not going to work like this every single time. You're not going to get these huge gains out of this. But when you expect the market to make a bigger move, one that is bigger than normal, one that you're hoping is going to exceed these leg lengths where you're looking for a pullback along the way, using these market lows in a buy trade is absolutely the best way to do this. Now, we're going to take a really quick look at a sell trade. So we've got this sell trade, we've got this swing low, price breaks below it. This will be our entry. So we're going to be placing our stop loss just above this swing high here. So we've got this swing high, market makes this move below, makes a pullback. And then once we get a market move below this swing low, we're going to be looking for the place to put our stop loss. And the highest high in between these 2 points is right here. So we're going to take our stop loss and move it to this point here. Now again, we get the market that has moved below this level. So we're looking for that pullback. So I'm going to mark off this level. Now we're waiting for the price to get 1 pip below this level. And now that that has happened, we're looking for the highest high in between point A and point B there. and that is going to be right here. So we are going to move our stop loss to this level. Price moves down, makes the pullback. We're looking for that swing low. And this is going to be a bit of a bigger one. We don't actually get a move below the low in this area. It just continues to move sideways. But finally, we do get that move lower, which happens right in here. So we're looking for the highest high inside of this whole area. And that looks to be right about here. So this is where we're going to adjust our new stop loss. Again, a swing low, a move up, stop loss gets moved here as the market breaks below this level. And we're going to see that over and over and over again. And finally, we're going to see a swing low, the last swing low that the price just will not be able to get below. And the last stop loss for this one would be right here. And this is where we'd ultimately end up getting stopped out. So if I zoom out a little bit, we're looking at getting stopped out of the trade in this area here where this stop loss is. And the initial trade had a stop of about 79 to 80 pips. But the winning trade in this one was 500 pips. Now, again, it's not always going to give you these huge trades. You're not going to make these colossal wins with this technique, but you are going to be able to allow the market to do it. If the market is going to be able to make these kinds of moves, this is the way that you're going to allow the market to make this move, not stop you out prematurely, and be able to catch as much of this trending move as possible. All right, I hope you enjoyed this video, and I'll see you in the next one.